All right, deep breath. I want to talk about real targets in this video, and I want to be very specific, even with time frame. I want to lay out my case for why I think the bottom is getting very close. I want to lay out my case for what will drive the bottom formation. And I'm going to lay out my case very simply of why I don't think we're entering a bear market right now. So please hit the subscribe, hit the like on the way in, and let's just track the data and look at these charts unemotionally. So I want to start. This is Bitcoin on the zoomed out. The real story here is very much illustrated on the S&P 500 chart. And this is what I want to walk through with y'all, because what is happening right now, and it's almost surprising how it is almost an exact reflection now of what happened back here in 2018. And this is really what I want to break down. So I posted very early today about a post that Donald Trump made in 2018. And I don't know if you were here or not with Bitcoin. I don't know if you were here with crypto in general, but do you remember the end of the bear market back here in December 2018? Boom, 50% move to the downside. I remember covering it. And I remember just we're down here and things are looking bad. And that was actually the bottom. But looking back now, Donald Trump made a post in that month, December 4th, 2018. I'm not going to read the whole thing, but he says, "I am a tariff man." And the market reacted very negatively. And you can see that here on this chart. Right now, this is S&P 500. Right now, we have almost an identical thing happening. And Trump, at the beginning of his second term now, doing exactly what he did last time. But the story gets even better. And I think it creates an even more clear roadmap for us. So before I talk about the exact Bitcoin targets to the downside, and I even want to look at the altcoin market cap chart and talk about what that might look like as well. And that's in this environment where we get some type of capitulation now to form the bottom. Before I talk about it, I want to lay the groundwork in terms of what is actually happening here. Meaning there's a lot of people out there, and it is fine, that are thinking right here is a bear market starting, right? So they're looking at this move back here, and they're looking at this move here, and they're saying, hey, this is a bear market. We're getting ready to enter this move. And, I'm getting a lot of comments that are just like, Dan, you're irresponsible because you're just remaining bullish on the macro and you're not calling it how it is. And I just want to say that I actually think I am calling it more how it is, because it's not as simple to just look at the move and say, hey, they look the same. It's going to happen. So let's dissect why it's so different. And actually, let's dissect why we're kind of in more of an environment like this, maybe not even as bad. So Trump posted that in December 2018, right? So the story begins back there, and we're going to work our way through this. But what's really important is understanding what else was happening at the time. So in terms of the quantitative tightening that was getting ready to end, Trump was basically trying to force interest rates down, force the dollar down, and he's doing all this tariff stuff. And here's what happened. January 30th, 2019. So if we're looking at this chart, we're looking at around January 30th. This is a weekly. So right around here somewhere, the beginning of the pivot started. But I want you to notice how the bounce began before that even happened. And the reason for that is because we saw Jerome Powell at that time begin to blink, begin to kind of give some type of reassurance that I have it highlighted here, right here. It's all it took. Some Fed policy reassurance, meaning, hey, I don't know exactly what was said. I have to go really find the quotes, but that was happening in that week. That's why this bounce happened. QT getting ready to slow down, come to an end. Now, March 19th, plans to end quantitative tightening were announced. And then July 2019, the Fed confirmed the end date for quantitative tightening. And just look at it. This was markets just bouncing out of all of the mess and all of the tariff man fear. That's the monetary policy environment in which we were. And it is incredibly similar to what is happening right now. Meaning, we've been in QT for some time now, for years. And right now, we're waiting for Fed to really signal that quantitative tightening is going to be wrapping up soon. So we can look to May 6th now, the beginning of May, that next meeting. I don't think the market's really liked too much of what Jerome Powell was saying recently. He's not hinting at it enough. But when is he going to blink? And we're around a month away from the next meeting. And so the bounce, wherever it will be, will rely probably on policy clarity as well as economic data. But the reason I'm bringing all this up before looking at Bitcoin charts and looking at targets for Bitcoin is because this move that we're in right now, as you can see, and we're just using purely data, what has happened in terms of monetary cycles and FOMC meetings and what Jerome Powell is doing, we're comparing here, where we are, to here back to here like years ago. And what's so interesting is they're both at the beginning of a Trump term. So we almost have the exact roadmap to how this might end up playing out. Now, the differentiator is this, because there's a lot of people that are saying, hey, we're about to enter a bear market, right? Where you look at the S&P 500 chart, we're breaking that 20-week moving average. It's going to get so bad. And please know, back here, there were a lot of people talking about a bear market. But what's the difference? The difference is this last bear market that happened here, this was March 2022. Fed was laying the groundwork for quantitative tightening to begin. And then in May 2022, they announced quantitative tightening to begin in June. So you can just see, here's March, right? And then reacting to all this news was the bear market. This is a weekly chart. And it had to bottom out at the 200-week moving average. So here's the question. It's a matter of target, how much downside there might be left. And also, I think the bigger thing is the window of time that this takes place. Because right now we're entering an environment where it's not a multi-month bearish thing that's happening. Right now it could be a multi-week uncertainty thing that is happening. And that's what it was back here in 2018. That's why it was a very quick dip off of the tariff man fears. And so right now we're in, I think, a very similar thing. We're in this very quick, volatile, quite large consolidation and dip because of tariff fear and tariff uncertainty. But please note the more important macro thing that is happening. Fed policy reassurance, quantitative tightening slowing down, all of that is very real macroeconomic data that we have to pay attention to. And that is why I'm saying I don't think it's a bear market that is about to start right now. I really don't. We can talk about bear market eventually. I just don't think now is the moment. Now, in terms of targets, if we just look at S&P 500, I just want to make a note. It hit the 200-week moving average. It was a massive dip for S&P 500 from that tariff man quote to the downside, like 15%, very fast. I want to just make one quick note. From where we are right now, 15% dip takes us to around the 200-week moving average. So now it's a question of, if there's going to be more downside, what's the volatility of it all? And I think this is going to happen potentially, if it happens, within weeks. So the next weeks can be very volatile, but I want to be very clear. This could be a massive macro opportunity. So I think there's people out there right now that are just like, man, we're entering a bear market. I'm just going to kick my feet up and this is going to be a multi-month, absolutely terrible thing. I'm exiting crypto. I'm done with it all. And I just think a lot of people are going to be surprised. They might feel good if they're shorting and leaving the markets. If we do go lower, whether it's 5, 10, 15% even, they might be like, I made the right decision. But I'm telling you, what I think will happen is there will be a bounce, whether it's, right here around 5,000 or down here at the 200-week moving average, or even not even that low. But when the bounce happens and we get Fed reassurance on quantitative tightening, people are going to be like, man, did I do the wrong thing there? Is this not a bear market? And you can watch. And I think we will see how quick sentiment will change. Now, Bitcoin targets. So here's the deal. First things first, I've been talking about the inverse head and shoulders area, $75,000 to $80,000 range. I've been talking about it since we were above 100,000. If you've been watching my channel, you know that we've been anticipating that. The move has essentially happened. And so from just a very short-term analysis kind of standpoint, I'm still just watching that area, right? So short-term target for me is still $75,000 to $80,000 for Bitcoin. Can it remain at that level and see support? And right there is confluent with that 50-week moving average. This is a very key area on the short term if we want to kind of just strictly look at short-term volatility of Bitcoin. But if we get into that environment now where if we're getting a 2018 fear move, right? We just looked at it on the S&P 500 charts. We see what it looks like. Massive move to the downside. On the Bitcoin chart, if I zoom all the way out, let's look at this. 50% move to the downside to that 200-week moving average. If in the weeks to come, things get bad in that type of environment, I want to make a note of some targets, specific targets. And I think if this happens, it will happen sooner than later. Here are the targets. Number one, as you see, we have the short-term range I just talked about, still just in play. Maybe Bitcoin holds support there and we don't even get as volatile as last cycle because maybe markets are kind of understanding of the direction that we're headed. But 75 to 80,000 first target. The second target, and this is probably the main target if we're going to get some real downside, for me is the previous swing low to swing high. And it's this Fibonacci area. So here's that swing low at the 50-week moving average. Let me zoom in a little bit so we can see this. So we have the 50-week moving average swing low that we had. Remember the mass fear that we had back here? September, July, August, all this time. We had a swing low and we bounced out of it. It's that swing low to the swing high, all-time high. And it's basically just this Fibonacci channel, right? The Fibonacci channel is in green. And that channel, that throwback channel, is a higher low channel. And it's right around 62,000 to around 71,000. And what's interesting about that area is we have kind of this last consolidation pattern that Bitcoin was within in 8 months of consolidation. It was, if you remember, it was brutal. It's brutal now. And isn't that interesting? All of these consolidations feel brutal, but if you zoom out, this is just the way crypto is anyway. But here we are. That's the higher low, but you can see that trend line pretty confluent with the lower range of this Fibonacci channel. So that $60,000 to $62,000 area for Bitcoin, if Bitcoin's going to actually capitulate, that's a very strong support area I'd watch for. That's probably my most, I won't say likely because I'm not even sure if it gets there, but it's my most, I think, normal target to just watch out for in this high fear environment in the coming weeks if people continue to what I think irrationally overreact to the tariffs. Because what I think is the tariff fear is going to end. And it's going to end very quickly. And then all of a sudden, there's going to be clarity with the Fed as well. And then all of a sudden, markets are going to turn bullish and we'll see a bounce. That's what I think will happen. And I could be absolutely wrong. I realize that. I'm just trying to put out there what I think is going to happen. And I'm trying to back it up with actual real life data. And while I'm saying that, I want you to know if crypto and S&P 500 and traditional markets, everything just enters a bear market, I want you to know it's just always something I'm saying, just always be prepared. None of us know exactly what will happen. Just always be prepared. I say always be prepared. It all fails. That's the best way to manage risk tolerance in these markets. That's the best way if we're headed up to kind of make sure you're held accountable to take profits. Is just to be like, you know what? At the end of the day, this could all fail. This could all fall apart. Now, the big target, the 200-week moving average is down here around 45,000. I'm not talking about that area because I'm saying it's going to happen. That is a very steep dip for Bitcoin from where it is right now. We're looking at around a 40-some% dip for Bitcoin. Now, the reason why I'm not so sure that would even happen, and I know last time in a very similar high fear tariff event, we had a dip like that, but we are talking about a different Bitcoin right now. Not only do we have multi-cycle, we have the diminishing returns, we have diminishing volatility. So not only do I just don't think we'll see 50% dip just because Bitcoin becomes a little bit less volatile over time. I also just don't think so, because if Bitcoin starts falling even into this first normal target range, right? We're already at this throwback area, 75 to 80,000, which is awesome, just technical move. But if it goes lower and falls into this next range, I just think Bitcoin is a whole new ballgame these days. There are governments racing to buy Bitcoin. Institutional inflows at these levels, I think, will be massive, and retail even. And so I think there will be a lot of demand for Bitcoin in this general vicinity. But I do want to bring up the 200-week moving average just because it's data on the screen, right? This is something that has happened before. I won't say it will never happen. It could happen. That's like bear market territory. And the question is, though, if it happened over the coming weeks, right, would that mean this is like a bear market? And then if we bounce out of it, is that the bear market? Because for me, an extended multi-month, grueling, painful downtrend is more of a bear market. This would be, I think, a very quick, volatile move if it even happened. But it's something to prepare for. All of these targets, I think, are something to prepare for. We've already been prepared for this move, right? It's the throwback to the head and shoulder, the inverse head and shoulders. And now it's kind of like, all right, if things get more volatile because the Fed has kind of maybe Jerome Powell dragged his feet a little bit in terms of giving us some type of certainty for the Fed pivot out of quantitative tightening. If that uncertainty is really going to affect markets, watching these levels is a good idea. Total crypto market cap excluding Bitcoin. So this is altcoins. I just want to make note of mainly last time when we're comparing to 2018, that big Bitcoin move with the tariff fear, altcoins around 58%. The Bitcoin move was around 51%. So this chart likely would see obviously a little bit more volatility than Bitcoin. Where that support would be, I would just be looking for two higher lows. Number one, and this is probably more in line with kind of the shorter term support for Bitcoin that we just looked at, some type of higher low above this swing low back here, right? So swing low, boom, maybe the 200-week moving average in the 800s is a bottoming out area, maybe wicking below and then popping back above. However, if not, then what I'd be watching on the more volatile altcoin charts would be basically this swing low back here, to swing high. We have a Fibonacci 786 in the 700s down here. Some type of higher low in terms of the bear market lows, right, is what we'd be looking for. Now, it just becomes a little bit more difficult to find exact support on altcoin charts when Bitcoin is kind of a more structured kind of chart right now. But I think Bitcoin for altcoins offers a great roadmap. So these are my thoughts, everybody, and that's all it is. I remain macro bullish on the space. I say it time and time again. I was charting this chart at the bottom of the bear market, and we're looking at 2018, December 2018. I was charting crypto back then, and I was bullish at those levels. And here we are now. Bitcoin's not at 4,000, it's at 82,000, and I'm just macro bullish, and I'm just trying to pace myself because really, as you can see over the years, is definitely a marathon. It's not a sprint, and it's all about risk management. These are my thoughts today, this Saturday. Please, I hope you're having a good weekend. I hope you're hanging in there. Hit the subscribe if you're not a subscriber. Turn notifications on. And if you enjoyed the video, please consider hitting that like button. I really appreciate you. And if you are a bull out there and you're still watching this video, just a little comment. Just leave a little comment. Let me know you're out there. It would mean a lot. I'll see you in the next video. God bless.